This week, we're going to dig into supply and demand numbers. Hello, welcome to the Weekly Livestock Market update on Brownfield. I'm your host, Meghan Grebner. With us this week, as we kick off the next generation of the Weekly Livestock Market update, is ag economist Charley Martinez with the University of Tennessee. Charley, no stranger to the program, but now here on a full-time capacity. Welcome.
Oh, thanks, Megan. Definitely not what I thought, how we were going to start this new realm in my house. But the snow here in Tennessee decided that that's where we're going to start this year at.
I think it's funny. The southeastern part of the U.S. has been getting all of the snow, and my counterparts who are in the upper plains and in the upper Midwest haven't had near the snow that like you and I have had in the Mid-South.
100%. Either college football playoffs or snow has been what everyone talks about around here.
I don't think they're talking about Tennessee basketball this week, are they?
Oh, probably not. We don't talk about Florida at all. They'll figure it out later this weekend.
All right, we're going to dig into supply and demand numbers. We'll talk a little bit about what's been moving the markets as we've gotten into early 2025. But first, let's recap it. Let's recap what happened this week.
Yeah, Megan. So as we get into a real full week here around the country, live cattle prices closed 20 cents higher this week compared to last week, and they closed at $1.97 per hundredweight. February live cattle prices were up $3.30 compared to a week ago, and January feeder cattle future prices were up $7 compared to a week ago, and they closed at 272 and 35 cents. Choice box beef was at $332.84 at the end of the week, which is up from $325.24 last week. Cash hogs were 30 cents lower this week at 79 cents per hundredweight. And February lean futures were up $1.40 or up $1.40 compared to last week, and closed out the week at $82.55. And then the pork cutout values were up 47 cents from a week ago and closed out at $92.02 per hundredweight on the week. And so, that's, as we compare it to last week and all that and the market highlights, it's kind of nice to get back in the flow of things and seeing complete weeks of data. As we look at weekly slaughter and in production terms for the week, cattle slaughter was at 579,000 head of cattle, which was up from 471,000 last week and up 51,000 compared to a year ago. Hog slaughter was at 2.384 million head, which is up 526,000 from the previous week and up 263,000 head compared to a year ago.
All right, Charley, let's talk a little bit about some of these prices that we've been seeing on the cattle front. As you take a look at that direct business specifically, record-breaking last week, record-breaking again this week, and as you look at sale barns, that's kind of been the pattern as well. Not just a supply issue on our side, but are things like what's been going on with the ban and the continued suspension of imports from Mexico into influencing some of these prices?
Yeah, so I think, we were anticipating decent prices at the end of 2024 leading into 2025. If you go prior to the New World screwworm, a news outcome that came around Thanksgiving time. But if you look at pricing data, and if you look around, New Mexico prices, Texas prices, you can almost look around the Southern Plains. The week following Thanksgiving, there was a big jump in prices and set some records in some of the markets. And, as we work through December and we get into January, that's usually a time where we would see imports of cattle coming from Mexico. And with the ban that was in place and currently still in place, we're seeing still elevated prices because people need to get cattle in certain areas of the country, whether it's some delayed wheat that needs to get, grazed down a little bit. But also, I think people know that throughout the year, throughout last year, there wasn't really much of a sign of the herd rebuilding or slowing down the liquidation process. So I think some folks are out trying to get cattle ahead of time and get them into the yards. They might be at lower weights, and if we look at pricing series data, the big impact of the ban of cattle coming from Mexico, we really saw the jumps in prices occurring in those low or the smaller weights, the 5.5 to 6 weights. That's where we really saw a gain in prices, almost $35 to $40 week over change in those markets of New Mexico and Texas and the Southern Plains. And so if you think about a $35 to $40 per hundredweight change that occurs, within a week from Thanksgiving, and then they kind of really rallied up for the 2 following weeks after Thanksgiving, and then they kind of came back a little bit. Those prices are a direct result of what we were seeing, or that demand for feeder cattle that was out there for those lighter weighted cattle that usually would have came and been supplied from Mexico. And so now it was released earlier this week that we are going to start implementing a new protocol to bring cattle in from Mexico starting the week of January 20th. And so what that looks like, and inside the report, you can see that it was talking about New Mexico port, a certain New Mexico port, where they're really going to be monitoring certain things and certain protocols that both countries have to agree on. How fast do we start ramping back up from Mexico and getting supply from Mexico is going to be something to kind of monitor. But we're still going to be getting into Q1 of 2025, where we usually do see an uptick in demand and prices, and so it could be something that is it will help elevate the prices that we're seeing currently still.
And it's so funny with this whole conversation about when we start back those imports, because USDA has been very tight-lipped about APHIS has been very tight-lipped about the date. There's been several that January 20th week's kind of what's been speculative about when it's going to happen, and there are certain protocols, but it's not going to we won't see imports resume where we left off because it'll take time and there's protocols that are in place. So when we think about that, Charley, does that potentially, knowing that we're going to bring those numbers back up, does that put pressure on prices? Does that impact what goes on in the markets as well?
Yeah. So, I mean, you bring up a good point when, that the week of January 20th is just simply saying, hey, we're going to start having the process and the talk again of what protocols are we going to use as we bring in cattle. And so if we bring them in slow, that means that we still will have support for higher prices, especially in those Texas and New Mexico markets as people are looking for cattle. But if they were to open the doors full blown and get back to numbers that we were bringing in prior to, that will be something that could really, kind of weigh down the prices in those markets. And I say that, as we think about it, those cattle that were still in Mexico, they had to have gone somewhere, right? Whether they were getting fed longer in Mexico, if we had cattle that were destined to come to the U.S. and be in our yards, well, they had to do something with them, right? They had to put them on feed longer, or they had to background them or stock them a little longer in Mexico. So they're going to be cattle that are going to be a little heavier. And so if we think about, if we open up the supply from Mexico back to the U.S., we're not talking about 5.5 to 6 weight cattle that normally we would have been bringing in. We would expect to see the supply increase more on the 7.5 to 8 weights. Because 60 days is, it can make quite a difference if they're putting on, 3 pounds or 2 pounds a day. We're talking about 120 to 160 pound difference on the animal that we're bringing in. So the impacts of prices, I would expect to see kind of more in those higher feeder calf weights of these 800s versus the low 550 to 600 weights. But that'll be something, the rate that we bring cattle back and at what weight we bring the cattle back will be the determining factor in terms of which cattle and which price series and which weight classes are going to be having some of the slowing down of prices or decreasing of prices.
Charley, the big report out this week, supply and demand numbers from the USDA. Obviously, we'll talk about things just as it relates to feed costs and input prices. On the protein side of things, were you a little surprised to see this reduction for production for 2024?
Yeah, so it's the World Agriculture Supply and Demand Estimates. I simply call them WASDE. So in the future, if people hear me say WASDE, that's what I'm referring to. If we look at the WASDE reports, I was kind of shocked to see the adjustment, just because we thought, if you look at the quarterly reports and the monthly reports that kind of, fill in the back end of 2024, and you can look at certain weekly data sets, we would expect lower, or we expect lower production compared to 2023. We had fewer animals, but when they open up 2025 with lower adjusted numbers, that kind of is a sticker shock to me. And if we look at the report, the reason why they were adjusting the numbers is because of expectations for slaughter numbers and weights in December. If we're looking at red meat and poultry production. And so if I think about that, I say poultry, I'm more talking about egg production from that standpoint. But, you know, if one of the first things that sticks out is if they have red meat reduction, my mind automatically starts thinking, okay, down the line to the consumer, we've already started saying we're going to have fewer pounds to sell to that consumer at the end of the day here pretty soon.
I would also assume lower production means we're probably going to see higher inputs, specifically on the beef side of things in 2025.
Right. Yeah. If we think about it and you look at the report, if you want to, we can go ahead and get into the beef side of things. 2025 beef production. If you go from the last report to today's report or this week's report, 2025 beef production was actually raised because of higher placements expected during the fourth quarter of 2024. That incremental raise, though, equates to approximately 125 million pounds for the 2025 expectation or the 2025 estimate. But that adjustment up still leaves 2025 beef production down 4.42% compared to 2024. And so if we think about that, that's simply saying, yeah, we've given you more production in 2025. We're adjusting 125 million pounds. But in total, we're expecting fewer or lower amounts of beef production, which is that 4.42%. But if you really look at the report, it's kind of interesting how they get to that number. In quarter one of this year, USDA is expecting actually higher beef production compared to 2024. But then if you start comparing 2025, and if you go from Q2 of 2025 and Q3 and Q4 of 2025, they have expectations decreasing. And if you look at it, and when we get to quarter three quarter three of 2025, we're expected to be at 815 million pounds lower compared to 2024. And then if we get into quarter four of this year compared to last year, 2025 quarter four production is expected to be almost 1.2 billion pounds lower. So if we take that report and we think about we're going to have lower production on the aggregate for the whole year, that production decrease is really expected to come in Q3 and Q4, or the second half of this year, which is why if you look at that report as well, we start seeing price adjustments. And so steer prices are expected, or they were adjusted up $5 from the previous report to this week's report. It was adjusted $5 up to $1.96 or 196 per hundredweight for prices in 2025. But if you think about prices being that high, number one, that's a sticker shock. Just $1.96 a pound or or $196 per hundredweight being adjusted. That much, $5 is a big adjustment. But as I was mentioning, quarter one of 2025 is expected to have more production. And then production is expected to decrease as we get throughout the year, with the second half of the year really having a severe decrease. Well, if we think about that in terms of prices, supply goes down, what happens to price? Price has to go up, right? So prices in 2025 are expected to really ramp up in quarter three. And that's where they expect prices to be at $1.96 per hundredweight. But in quarter four, prices are expected to rise to $1.98 per pound, or $198 per hundredweight. And so we have this decrease happening in beef production throughout the year that's being expected. We expect prices to increase, and so it's not somewhat. If you think about supply and demand, just classic economics, lower supply, higher prices. We see the market at work within the WASDE report, and so if we think about when we get to that January 1 report that comes out next month, that's going to be something that will be really interesting to see. Maybe the next WASDE report has an adjustment even higher if we were to have more liquidation than what they anticipated making this report. And we see that there really is no sign of heifer retention. We might see this adjusted number be even higher next year or next report, which will be something I'm watching on the beef side.
I would assume that January report for cattle inventory, it is becoming that much more important that comes out.
Yeah, we talked about it when it was Kenny and Josh and myself and Scott's last go round a couple of weeks ago, and it was if we had a government shutdown, we wouldn't have that report. And if you really think about it, that means that we would, if we had the government shutdown, that January 1 report we probably wouldn't see till March or April. And avoiding that was big, and it just kind of makes that report just that much more important for the beef folks.
All right, on the pork side of things, interesting to take a look, and I think that December quarterly hogs and pigs report really is showing up in pork production estimates as we look ahead to 2025.
Yeah, and so it's kind of a different story on the pork side of things. 2025 pork production was also raised 140 million pounds due to the increase in the farrowing and the pig crop data. That increase equates to 722 million pounds more expected in 2025 than we saw in 2024. Total production on the pork side of things in 2025 is expected to actually be 2.59% higher now compared to what we saw in 2025. If we think about where that supply happens throughout the year, the expectation is that as we go throughout the year, each quarter is actually going to be increasing in total supply compared to 2024. And so if we have a continual increase of supply throughout the year, that's when we start seeing some adjustments to prices throughout the year, right? And so between the last WASDE report and this report, prices were actually adjusted up just $1 per hundredweight to $63 per hundredweight. But if we think about that price, and while it's still $1.50 above, or approximately $1.50 above last year's average price, prices are expected to elevate around Q3, Q2 up to $70 per hundredweight, and then come down because we have that increase of supply that's really going to fluctuate at the end of the year, especially that second half of the year. Expectation is that prices will start to come down. And so if you're in the pork side of things, it might be good the first quarter, 2 quarters of the year. And then as we get into that third quarter, we will have to be kind of on alert for possible price decreases occurring to close out that year or close out 2025. And we're on January 10th of 2025. And I just said a sentence that's saying we'll have to watch that at the end of 2025.
I feel like risk management is probably the one thing that we're not going to be able to talk enough about this year.
Yeah. So, one of the things, and I think Meghan and you and I have talked about probably risk management almost every time that I've ever done an interview or anything with you when it comes to the markets and stuff. But if we think about it, producers will see these high prices, especially on the beef side of things. Pork side, it's kind of this in the similar vein, but when we start seeing prices be this elevated, sometimes folks are saying, well, why would I want to pay money for insurance whenever prices are so high? I don't want to give up any of those dollars. I think we need to change that mindset to a certain extent. Instead of thinking I don't want to pay money to give up some of these high dollar or the value on the high prices, it's more of paying for that downside risk of falling that much more now. It's if you were marketing cattle in May of last year, prices peeled back pretty hard. And we had folks here in Tennessee that took out LRP and it really paid off for them. And so if we think about what happened last year or even the previous year, there were still some downturns throughout the year. Yes, on average, the year might be really great, just like 2024 was really great on average for cattle prices. But there were still times in that the ebbs and flows of prices, they came down a little bit. And if you were marketing cattle and had no insurance, it really hurt. And so we also know that things can happen overnight. The New World Screwworm was something positive that happened for cattle, and prices actually picked up and increased. But if something was to occur that could really draw back prices, if there was a disease outbreak or something happened from a geopolitical standpoint, those are things we can't control, but can also impact prices overnight. And so it's one of those deals that, yes, the prices look good. They're elevated. Some of the highest value calves we've ever seen have already happened, and they'll continue to happen this year. But it would be quite unfortunate if we didn't have something simple like an insurance policy that to at least give us some type of floor on that bottom. It's something simple as LRP is something that I tell producers a lot about. It's a simple insurance policy that it gives you a solid floor. It has some flexibility in terms of adjusting from one head to a lot of head. But if you're a larger producer, I would really start to look at options markets. From a risk management standpoint, you can be as flexible as you want if you're selling load lots with LR or with options just as much as a small producer can be with an LRP insurance policy. And so if we think about it, we do a lot of research here in Tennessee on LRP insurance and take ups. And what I mean by that is the number of producers throughout the country. We look at the data up through even 2025, and we have the last 5 years. And we see that if you're going to do an insurance policy, the more or the higher level of coverage that you select, that gives you the higher probability of it paying off if you have insurance. And so what I mean by that is if you're going to get insurance, try to get the most coverage that you can. Because if you're doing a minimal amount of insurance coverage because of a subsidy rates that's in your advantage, or it is to your advantage, are you really truly doing insurance to that extent? And so if you're a producer out there and you see these prices, the downside is the worst thing that could happen. Not being able to capitalize on these prices when you could have with an insurance policy.
Quickly to wrap up the supply and demand report this week, Charley, as you take a look, obviously we've seen higher prices and some price adjustments in terms of livestock producers, what they're receiving. Input costs are always a concern as well. Just a quick rundown of kind of the projections or your thoughts about where inputs might head in 2025.
Yeah, so if we look at the two big ones that we'll usually watch, it's corn and soybeans. So on the corn side of things, the bushels that were dedicated to feed were down between the last two reports, 50 million bushels. While that sounds like a lot, some of that's going to be more related to location. 50 million pounds getting spread throughout the country is not going to have too much of an impact. But if it was to happen in your local market, that really could adjust the basis. And all that to say is that if you take that amount, 50 million bushels, I think and while that sounds like a lot, I think the bigger story and the bigger pop that kind of stuck out to me was the price swing of expected bushels. There was actually a 15-cent swing in prices per bushel, which is a solid bump in prices. Usually we'll see somewhere in the neighborhood of 5 to 10 cents, either up or down. So if we see a 15-cent bump, that's actually quite a bit. And so again, if we have an upswing in prices and we have a reduction of that 50 million pound or the 50 million bushels on the corn side of things, that's telling us a little bit that depending where you are, your price of corn could actually have gone up over, that 15 swing on the upside. It could have gone up even more. And so, if that just tells me that people are, if it did, they're going to be seeking out other alternatives for corn. Complementary to that is going to be the soy side of things. The soybean kind of reports that come from from the WASI report. To me, the first thing I see that sticks out is that there wasn't too many adjustments. If you look throughout the different line items, yield and harvested acres were down, which equated to 90 million bushels in the ending stock change. And so, there was some change on the actual production side or the expectation side. But one of the things that I thought would happen as well, though, is if you have a supply change occurring, there should be a price change. And if you look at the soybean expectation, price of soybeans did not change. But part of that is somewhat expected because we know our friends in South America, their impact on the global market is something to really keep an eye out on. And so with no adjustment on the pricing side of soybeans, to me, that means that we're kind of waiting to see what type of production comes out of South America. And then in the next coming WASI reports, there'll probably be some adjustments that we can see or expect to happen.
Last report we're going to talk about this week, winter wheat and canola seedings information. Now, as we think about our coverage area, right, we're Corn Belt, and that's a really large part of where we are. Why are livestock and cattle producers monitoring what's going on with the winter wheat and canola seedings?
Yeah, so something that I like to monitor is the winter wheat and canola seedings report. And because the reason why I like doing that is we know that wheat can go off, it can be dual purpose, right? It can be used for grazing for cattle. It could also be used for wheat production. And so when I look at that report, it's something that as we think about location of where we find the people that are actually grazing wheat for livestock, and that would have impact on our markets. The report was actually kind of surprising. Winter wheat and canola seedings in terms of wheat acres, it was actually up 2%. So we had a 2% increase nationally in wheat acres. But if we look at our movers and shakers in wheat, Texas was actually up 5% compared to a year ago. So they actually had 300,000 more acres increase in the state of Texas. Oklahoma, we think of Oklahoma as a big wheat area. That's actually down 2% compared to a year ago. If we think about what we were talking about earlier in New World screwworm, whenever we had put the ban on here in the U.S., that was about the go time where we needed cattle to go out and cover the wheat areas and be grazing and being stockered and backgrounded on those wheat pastures. And people were anticipating to have that supply. Well, when that didn't happen, that's where they had to turn to other markets like the Texas market, the New Mexico market, Oklahoma market. And that's why we saw that increased demand hit those markets, which led to increased prices. One of the other states that has an impact a little bit is Montana. Montana was actually up 15% compared to a year ago. So that's a monster swing in wheat acres. The one caveat that I want to make sure that's said, though, is that while we look at wheat acres, we know that wheat, not all of it goes to either livestock production or it goes to wheat production. And so we have to kind of be careful when we look at some of these numbers and these sticker shock numbers, like a 15% increase. But one of the things that sticks out with Montana, while it's high in terms of being 15% higher, they actually have a really good snowpack occurring right now out there. And so if we think about in a couple of months, whenever it's ready to go and it's out of dormancy, that snowpack is going to give it some life in terms of having some potential to be grazed and give an opportunity and some versatility to producers up there. And then if we really think about the drought monitor and monitoring that and currently and where we think it's going to go into the future and kind of historical patterns, we do know that there's some acres up in Montana that where people will graze wheat. And if we have that much of an increase, we would think that might be that might lead to an increased demand for cattle out in that area. And so if we have that happening, if we get a good year in terms of moisture, we could actually see some potential signs of herd rebuilding occurring. You can throw out some heifers on some wheat and get it going or get them going. It could be stalkers and backgrounders where we have some demand for feeder cattle. So, monitoring that in the next quarterly report will be something very interesting to see. And I know that a report like winter wheat and canola seedings is not something that historically has been talked about on this show. So it's kind of neat to have something different and new that's probably not talked about a lot on this show. And I plan on adding more to it. Instead of just talking about some percentage changes, there's some other reports that I would like to intertwine for our listeners. So if you're listening to this and you're like, well, Charlie, you only talked about a couple of percentages on 3 states and you only talked about national change. Just give us a little bit of time as we start getting into ebbs and flows of how the show will be. And I'm excited to kind of, incorporate different reports to give different perspectives on things.
We are definitely excited to have you and Josh and Kenny join us for this new iteration. Charlie, before we wrap up today, what's one thing that you're looking ahead to and that you're watching in the next week?
In the next week, for us, it would be some trade data that can come out. But for us, when we think about nationally, if we just put the reports to the side, I'm going to be wondering about the impact of the snow that we've gotten and the weather that we've had the last couple of days, what the impact that's going to be on markets. I was doing an extension meeting last night, and they were happy because it wasn't wet yet and muddy yet. It's going to start getting wet and muddy here pretty soon around Tennessee. And so I know Kentucky's got a lot of snow as well. And how growing up, I grew up in North Texas. And so how I gauge if it's something to really be worried about is if places get snow that normally don't get snow, and Dallas got snow. And so to me, it's like, all right, those are going to be things to be watching. In particular for here in East Tennessee, we actually have a graded feeder calf sale that got moved already next week. It was supposed to be next week. It got moved to the following week just because of weather. So the weather's going to have some impact on what happens in the markets. And that's something I'm really interested to see what happens.
Well, we're glad to have you. We will see you here I guess it's 3 weeks, right? So it'll be Josh next week, and then Kenny, and then Charlie will be back.
That's right. That's right. And hopefully they're actually in their offices and not inside of a house with horrible lighting.
It was wonderful. All right. To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.